Hey guys, welcome back to Illumined, your 10-minute book summary channel. Today we're diving into the mind of one of the most successful investors of all time, Warren Buffett. We'll be decoding the wisdom from his book, The Essays of Warren Buffett, a compilation that offers an immersive look into his investing philosophy. Over the years, Buffett has amassed an enormous fortune through his keen investing strategies, earning him the nickname the Oracle of Omaha. But what if I told you that the strategies of this billionaire investor could apply to you as well? Yes, you heard that right. Even if you're not sitting on $1 billion investment portfolio, Buffett's wisdom holds relevance. So buckle up as we explore the world of Warren Buffett, dissect his core investing principles, and most importantly, find out how they can guide you on your financial journey. So can the strategies of a billionaire investor apply to everyday people? Let's unlock Buffett's wisdom and find out. Now, who exactly is Warren Buffett, the so-called Oracle of Omaha? Well, folks, Warren Buffett is much more than just a billionaire investor. He's a legend in the world of finance, known for his uncanny ability to spot companies with a strong potential for growth. Hence, his nickname, the Oracle of Omaha, a nod to his hometown in Nebraska and his prophetic investing prowess. Buffett's investing style revolves around a key principle: value investing. This approach isn't about chasing the next big thing or getting rich quick. Instead, it's about patiently searching for companies that are undervalued by the market, but have a solid business model and the potential to grow in the long run. Think of it like this: he's not the guy who buys the flashy, overpriced car on a whim. He's the one meticulously checking a used car for signs of long-term reliability and value. Remember, Buffett's approach is about buying undervalued companies with long-term potential. It's like hunting for rare gems in a pile of stones. Let's dive into some of the core principles that Buffett employs when investing. Now, these aren't some arcane secrets or complex algorithms. Instead, they're simple, time-tested strategies that anyone can use. First up, Buffett believes in buying quality businesses. It's like picking out a car. You wouldn't buy a flashy car that's going to break down in a few months, would you? Instead, you'd look for a reliable model that's going to serve you well for years to come. Similarly, Buffett looks for companies with a strong track record, solid management, and a competitive advantage that will help them weather economic storms. The second principle is to avoid emotional decisions. Now, imagine you're at an auction and you've got your eye on a vintage record player. The bidding starts and soon it's a war between you and another bidder. The price keeps climbing, but you're so caught up in the heat of the moment that you end up paying way more than you intended. That's exactly the kind of situation that Buffett avoids when investing. He doesn't let market hype or panic sway his decisions. Instead, he sticks to his analysis and trusts his judgment. The third principle is to have a long-term perspective. Consider this: you wouldn't plant a seed today and expect a fully grown tree tomorrow, would you? Investing is similar. It's not about making a quick buck, it's about planting seeds and patiently waiting for them to grow. Buffett often holds on to his investments for decades, allowing compounding to work its magic. Now you might be thinking, that's all well and good for Buffett, but how can I apply these principles? Well, it's simpler than you might think. When you're considering an investment, don't just look at the price. Look at the business behind the stock. Is it a quality business? Does it have a competitive advantage? Next, check your emotions at the door. Don't let the fear of missing out drive you to make impulsive decisions. Do your homework, trust your judgment, and stick to your plan. Finally, remember that investing is a long game. It's not about timing the market. It's about time in the market. Be patient, let your investments grow, and let compounding do the heavy lifting. It's not rocket science, folks. These principles are pretty straightforward and can be applied by anyone willing to take a long-term perspective on their investments. But Warren Buffett's story doesn't end with his investment success. He's not just an oracle of investment wisdom, but also a beacon of generosity. Beyond the billions in his account, Buffett's true wealth lies in his philanthropic endeavors. He pledged to donate over 99% of his wealth to charitable causes, and he's been living up to that promise. He co-founded the Giving Pledge with Bill Gates, encouraging billionaires to commit to giving away the majority of their wealth to philanthropy. Buffett's philanthropy goes beyond mere donations. He invests in causes that create a lasting impact, like improving public health, supporting education, and combating poverty. He believes in the power of compound interest, not just in finance, but in life. Investments in kindness and generosity, he says, pay the highest returns. Buffett's legacy goes beyond his billions. He's a prime example of how investing can also be a force for good. Now that we've decoded some of Buffett's wisdom, what's next for us? Well, we're certainly not about to sit back and let all this newfound knowledge go to waste. The first step is to realize that you're in control of your financial future. It's time to take that control. Start small, yet start smart. There's a vast array of tools at your disposal, from budgeting apps to fractional shares that can help you dip your toes into the investment waters. The key is to remain patient and focused, just like Buffett himself. But remember, you're not alone in this journey. We're all here, learning and growing together. Share your financial goals or questions in the comments. Let's learn from each other's experiences and insights. Remember, it's never too early or too late to start investing. You don't need Buffett's billions to get started. All you need is a bit of wisdom, patience, and a long-term perspective. Before we wrap up, I want to leave you with a quote that has been a guiding principle for many successful investors. Buffett says, "Price is what you pay. Value is what you get." This quote is a potent illustration of the importance of distinguishing between a company's stock price and its intrinsic value. This principle is at the heart of Buffett's investing philosophy. While stock prices are influenced by a myriad of factors and can fluctuate, the intrinsic value of a company is based on its underlying fundamentals. It's about comprehending the business, its competitive position, and its potential for growth. This is not a straightforward task, and it demands patience, diligence, and an appetite for learning. But always remember, investing isn't a quick profit game. It's a long-term journey of wealth creation. And this journey is not just about price, it's about value. It's about identifying companies that are truly worth investing in, not just those that are currently in vogue or trending. Thanks for watching. If you enjoyed the video, do me a favor and let me know in the comments. You can also let me know which book summary you'd like to see next. See you next time, and please hit that like and subscribe button.